A lot of people, are like, oh, okay, we've had this news come out, and of course, now it's priced in, and things can't get any worse. We had the worst behind us,
Hmm.
and
Well, they
so
can always get worse.
right, exactly. And there's also kind of that, oh, I want to buy at the bottom. Oh, things are at a discount, so I want to get in at
Yeah.
that point. So, um, how has patience served you well in your 43 years of investing here?
Well, my discipline and my patience is the key to my success, and is my strength, and is probably my advantage over most people. That's the real key. But it to me, it's really simple. And if we let's bring up a couple charts here. Let's bring up a couple individual stocks. Let me get a little list of names here. Let's see. What are some names that we recently trafficked in and got beat up in? Because most of the names that I recently bought, knocked us around,
Hmm.
so because of that, I've never been able to get large in the market. I'm just trading really, really small. So I never really understood how it's difficult to stay disciplined or be patient, because all I do is just place some small bets, and until the small bets work, I don't place big bets.
Right.
And when the big bets work, and then when the small bets work, I start building on that. So if you take a look at something like uh, well, maybe even TATT. Here's one that came out of a base recently on April 17th, and then the very next day, wham, it gets slammed, and it's come back. It's back up close to those highs that are close to 3180 today. But look at the volatility. You see, I'm
Right.
I'm not going to be able to make it through that. That's going to knock me out. And that's been the case on a number of these names. APEI, another one. Bought this. This is a stock that broke out a little small gap on the 28th of April. Very next day, wham, gets slammed. Now again, see, it's higher, and you could say, "Oh, I should have held it. I should have never gotten scared and knocked out." Well, who knows? That could have turned out to be something, disastrous that kept going lower. You have to manage your risk. You have to manage your risk in real time. You don't get to see the future. That's all in hindsight. GRPN, Groupon took off on earnings back in March. Was a power play, high tight flag type setup, tried to emerge, started moving into new high ground around the 24th, 25th. Next day, wham, gets slammed. You'll see it over and over and over. Even stocks that started off pretty good, something like TG Therapeutics, TGTX.
Yeah.
Yep, that tried to go on 21st of April. Then it had an outside day, ended up closing bad that day. Then it recovered, went into new high ground, and then just recently going into earnings, wham, gets slammed into earnings. T2, we still own T2, but it's because we bought it coming out of this base, and then sold after getting hammered on a bunch of names. Said, you know what, we're not going to fall for that anymore. We're gonna take some off into strength and finance the risk and make sure if it comes back in, we've already cushioned ourselves a bit. So now they just there's going to be a delay in their game or something, and that took the stock down, but we've already taken some off, so we're still holding through that. But look at, you see the volatility, something like a GEO, the Geo Group, pretty decent base, started trying to come out of that base, no real volume, but recently has rolled over earnings again. Had earnings and just rolled over today. Let's see what else. KINS, another one, pretty good base, right? Coming out on the 29th. Next day, wham, gets
Yeah.
hit. Um, I could go on and on and on. There's a ton of these names. ATG is one that we just bought 4 or 5 days ago. That's holding up right now, but who knows how long that's going to make it. Um, Netflix is holding up really good. I think Netflix is doing some really, really great things, and Netflix, is well beyond. They're doing things well beyond just renting movies,
Right.
and all this capital that these companies have, like Netflix and Amazon. They've got a monopoly now. That the Mag Seven, these big names have a monopoly that's bigger than when the Rockefellers and the Morgans had the rails and the
Uh-huh.
oil businesses. It's a bigger monopoly
The
than
new
ever.
robber baron, huh? And I do have a position in Netflix myself, but yeah, to your
Netflix is
point,
acting really great.
yeah.
Yeah, it's really acting good here. So
And
there's a
to your point, like this is, if I remember correctly, this is around the time that their first original programming came out. They had their disastrous pricing model kind of, really tank things. But House of Cards was the first original programming,
Mhm.
and I mean, you can see what a move it's had. Yeah, since then.
Yeah, so there now when you can only point to, a couple names that are working and a whole bunch that have this volatility, that's what I call a hard penny environment. It's just not an environment that is I didn't get into the stock market to get an ulcer. I got in the stock market to enjoy it and have a challenge that's fun and be passionate about something and make money while doing it as a business. But so I'm going to wait for what I call an easy dollar environment, and that's when you're picking up money off the floor, and it's very simple. You buy the breakouts, they work, and you cut your losses, and there's not a whole lot of volatility. So if you go to you look at the VIX, to pull up a chart of the VIX here. I look at it in a couple ways. Um,
And
I
you know
mean,
what? I'll
first,
go, I'll go to the chart that here's our market search chart, but I can go to the chart that you provided with the
yeah,
comparison if you want.
pretty much the same thing. We've got we use Ned Davis research for a bunch of our charts.
Here, let me go
And
to that real quick.
sure. So the volatility is still pretty high at this point, and a couple ways we look at it. One is when it gets over 28, you get to that 28.30 level, that's what we call a bear market warning level, where that's where you can bottom there. If it's a shorter term correction, you'll spike above that level and you bottom around that level. So you start looking for the type of action that you would see follow through day and so forth. But it also is enough volatility that you've got to be very quick to move and get the heck out of there if it doesn't work. If you don't see that bottom, you saw that volatility came up right around the highs in 2021 going to 22, and that was the start of a bear market. And then you see when the volatility comes way down, that's where you get that nice run, and it stays down pretty much the whole time until July, August of last year. And now you see the volatility starts to pick up, and then we top. So I want to see that volatility come down. I also look as far as how it's trending. I have another chart where you'll see there's the trend of the volatility. Yeah, you can see it's trending up and it's relatively high. So I want to see that trend start to turn down, and I want to see that absolute level come down. But more importantly, forget everybody focuses on the VIX. I don't have to look at the VIX. I just look at the individual stocks. And what I just showed you prior to this of all those stocks whipping all over the place, that's all I need to know. When that's the results that I'm getting from making my plays of stocks coming out of bases, that's all I need to know. And I'm going to stay small and I'm going to stay mostly in cash.